Yo, what's going on, YouTube? This your boy Leo. Check this out. For those of you who are new to my channel, you're watching my videos for the first time, welcome. Make sure you hit that subscribe button and that bell notification so you can be notified in the future, you dig? But I was one of the first traders on YouTube talking about Forex. I posted this video more than 11 years ago. Back then, nobody was talking about Forex. Think about what you was doing 11 years ago. You probably never even heard of Forex. That means if you like 25 or 26 years old, you wasn't even old enough to trade Forex back in the day, 11 years ago. Nobody was talking about Forex. And I'm saying that not to brag, just to tell you that I don't follow no guru on YouTube. I got my game from real Wall Street traders. I read a lot of books, went to the library, and that's how I became a better trader. I'm basically self-taught. I know everything from the Elliott wave, supply and demand, the break and retest. I know a lot about level twos, time and sales. Basically, I know everything when it comes to trading. Here's what I learned in all my years of trading. It's not about a strategy. It's all about money management. Once you learn how to manage your money, then you come up with a strategy. Because at the end of the day, every single trader on the planet loses trades. We're gonna lose. The question is, are you losing $1,000 per trade or are you losing $100 per trade? You wanna minimize your losses when you're wrong. You wanna maximize your gains when you're right. If you can master that, you could trade in the strategy and make money. With a 3-to-1 risk to reward ratio, what do that mean? That means you're risking $1 to make $3. So every time you're wrong, you lose $1. And every time you're right, you make $3. Let's look at a bigger picture. You're risking $100 to make $300. Or you're risking $1,000 to make $3,000. All that is a 3-to-1 risk to reward ratio. You minimize your losses when you're wrong, and you maximize your gains when you're right. That means with a 3-to-1 risk to reward ratio, you could take 10 trades a week and lose 7 trades. That means you only winning 30% of your trades, and you still can make a profit. That's powerful. Now check this out. You take 10 trades a week. You only win 3 trades. In this example, the W in the blue box are your wins, the L's are your losses. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 trades. You only won 3. You make $300 when you're right, and you lose $100 when you're wrong. In this example, you made 300, you lost 100, you lost 100. You're still up 100. 3 wins can cover 3 losses. So this is 30% win rate. At the end of the week, you lost 7 trades, $700. You only won 3 trades, $300 each, that's for $900. Do the math. 900 minus 700 is what, $200. That's how much you made for the week, $200. And you only won 3 trades. $200 a week times 52 is what? That's $10,400 a year. Trading for a couple hours a day. You're still making $10,400 a year. Only winning 30% of your trades. But you got to manage your money. I don't care about your strategy. I don't care who's your mentor. I don't care if they made $1 million. I don't care if you put $1 million in your account. You got to manage your money. If you can't trade with $1,000, you definitely can't trade with $10,000. And you can't trade with $1 million. The amount of money you put in your account don't make you a better trader. And when you wake up in the morning, being active do not make you a better trader. A lot of traders think they're not trading, so they're a pitiful trader or they're a failure. But every morning is not designed for you to make money. Sometimes you're going to be watching these charts and not take a trade. Sometimes the best trade in the game is no trade at all. If you don't see your setup, the market not moving in a comfortable way for you, don't take the trade. It's that simple, people. Some of the best traders spend 90% of their time just watching charts. They are not actively trading because they don't see a setup. And they're not trying to force any trades. They're very picky about selecting trades. They want them A+ setups. A C+ setup is not even good enough. They want them A+ setups. Sometimes the best trade is no trade at all. Now, what is the A+ setup? We all know the market do this. They go up, go down. You know that. That's what the market do. I'm looking for the market to hit a key level and react. My key levels are on a 1-hour time frame, the 4-hour, or the daily, sometimes the weekly. I want it to do something like this. The market is going up, hit a key level, you have a problem breaking this key level. It tests again, it come back down. It tests again, it come back down. It tests again, it come back down. It's reacting to a key level. This is my key level right here. Eventually, it breaks the key level. When it breaks the key level, I'm looking at my volume indicator, or I'm looking at my time in sales. I want to see momentum. I want to see momentum while it breaks this key level. More buyers getting in. Because the sellers are dominating this level right here. That's resistance. The buyers are dominating support. That's what the market is all about. Who got control at certain levels? I'm looking for buyers and sellers to control or dominate a certain level. In this case, since we're testing resistance, I'm looking for the market to break resistance. That means the sellers are no longer dominating. The buyers are taking control. The market is going up. The market was coming down. I'm looking for the buyers to dominate. That's why the market normally go up, come back and retest. The buyers keep dominating. And I'm looking for the sellers to break out and take control. Sometimes I might look for that retest. That means this level held. It can't break back over that retest, and what it do, it drop. This is my 8+ setup. When I'm hopping in this trade, I'm using my stop loss, right? I want to risk $100, so I'm setting my stop loss about right here. If I want to risk more, like $500 or $1,000, I'll set my stop loss further down. My stop loss protect my account. If my stop loss get hit, I'm not worried. I'm not concerned because that's the money I can afford to risk. So if the market come back down, I'm not moving my stop loss further down because the market could keep coming down. And then I'll lose $2,000 when I could have lost $500 right here. So I never move my stop loss. I'm managing my money properly. I'm risking the same $500 or the same $100 every single trade. And I'm trying to triple my risk amount in profits. So if I'm risking $100, I'm trying to make $300. If I'm risking $500, I'm trying to make $1,500 in each and every trade. I promise y'all, if y'all stop switching strategies, stop looking for new mentors, and do what I tell you, you will start seeing a return on your investment consistently. It's not going to happen overnight. Don't let one day or 1 week, not even 1 month, determine your trading skills. It's going to take a couple of months. Follow this training to the T. In the long run, in a bigger picture, you'll see profits. It's your boy Leo, Stack and Grow Capital, you dig? Peace.